Ever wonder why half the gurus on YouTube are flipping houses while the other half are warning you'll go bankrupt trying? The secret's in a number. Most beginners completely botch, and it's not the down payment. Imagine you just closed on your first investment property. Keys in hand, victory, champagne ready. You walk through the front door and immediately smell something that definitely wasn't disclosed in the inspection report. What now? Here's the thing nobody tells you at those weekend seminars. The moment you own that property, you own every creaky floorboard, every mysterious stain, and every "it was working fine yesterday" appliance. The clock starts ticking, and so does your wallet. So how much should you actually set aside for immediate repairs? Most seasoned investors budget between 5 and 15% of the purchase price for those first crucial fixes. That's not renovations or upgrades, that's just getting the place functional and rent ready. Let's say you bought a property for $200,000. You're looking at $10,000 to $30,000 sitting in reserve, ready to deploy the second you find that leaking pipe or realize the HVAC system has been held together with duct tape and prayers. Suddenly, that great deal looks a little different, doesn't it? Now picture yourself as the investor who skipped this step. You allocated every penny to the down payment, closing costs, and maybe some paint. Then reality hits. The water heater dies on day 3, the roof's got a soft spot, the inspector somehow missed, and the electrical panel looks like a fire hazard waiting for its moment. Each emergency becomes a scramble, a credit card charge, a panic call to your lending officer. The professionals know something, the amateurs learn the hard way. Immediate repairs aren't about making the property pretty. They're about making it safe, legal, and livable. We're talking foundation issues that could tank your investment, code violations that block your rental license, safety hazards that open you up to liability. Here's where it gets interesting though. That 5 to 15% range isn't random, it's based on decades of collective investor pain. Older properties trend toward the higher end, newer ones toward the lower, but even turnkey properties can surprise you. The house built in 1985 might need all new plumbing. The one from 2015 might have cosmetic nightmares, hiding behind fresh paint. Smart investors treat this budget like insurance. You hope you don't need all of it, but you'd better have it ready. Because unlike your primary residence, where you can limp along with a broken dishwasher for 6 months, rental properties need to be market ready yesterday. Every day of delay is lost rental income, and lost income is the silent killer of real estate returns. The irony? Most new investors obsess over finding the perfect deal, negotiating the price down by $5,000, then completely forget to budget for the inevitable repairs. They save money on the front end just to hemorrhage it on the back end, usually at the worst possible markup, because now it's an emergency. Let's add another layer. Immediate repairs aren't the same as your ongoing maintenance reserve. That's a different bucket, a different calculation. We're talking about the stuff that needs to happen before you can even list the property or hand over keys to a tenant. Think of it as the entry fee to the real estate game. Not the only cost, but definitely non-negotiable. You know what separates the investors who scale from the ones who sell their investment at a loss 2 years later? Systems. They walk through a property with a contractor before closing, get 3 estimates on known issues, and pad those estimates by 20% because contractors are optimists and houses are liars. Here's the playbook. Inspect everything, assume nothing, and budget generously. When you're calculating your offer price, factor in those immediate repairs as hard costs, not maybes. If the seller's asking $200,000 and you're staring down $25,000 in immediate fixes, you're really buying a $225,000 property. Math doesn't care about your excitement. The adaptation happens when investors get burned once and adjust. They start building relationships with contractors who can turn around estimates quickly. They keep a running list of reliable, fairly priced tradespeople. They learn to spot red flags during walkthrough that scream, "Budget higher." It's evolution through expensive education. But here's what persists. Despite all the podcasts and courses and YouTube channels, new investors still underestimate this category. They still convince themselves their property will be the exception, that surely the seller fixed all the major stuff already. The cycle continues, one shocked homeowner at a time. Present day, nothing's changed except the prices are bigger and the stakes are higher. Real estate's still one of the most reliable wealth building tools out there, but it rewards preparation, and punishes wishful thinking. Those immediate repair budgets, they're not pessimism, they're pattern recognition. Even the pros sometimes get caught. The difference is they've got reserves to handle it, systems to minimize it, and enough experience to not panic when the unexpected becomes the inevitable. They build that resilience by doing exactly what we're talking about, budgeting properly from day one. The game behind the glossy before and after photos is pretty simple. Know your numbers, pad your estimates, and never assume the property is truly turnkey until you've lived through the first 30 days of ownership. That's when the house tells you its secrets. So yeah, 5 to 15% of purchase price for immediate repairs. It's not sexy, it's not exciting, but it's the difference between building wealth and funding expensive lessons. Want to find properties where you can actually run these numbers and make informed decisions? Check out growthsense.com, a directory designed to help investors like you discover real estate investment opportunities with the data you need to budget smart and invest smarter. That's www.growthsense.com, because the best investment starts with knowing what you're actually buying.